Coming up in this masterclass, we will be looking at payment protection insurance.
They can get to the point where they can see their exposure far quicker because they've processed all the input, they know what the redress needs to be, and they have a ring-fenced amount then which they can say, this is our true limit of exposure.
And Tian, how could that principle of big paper be applied to payment protection insurance?
PPI has been a big problem for the banks, obviously, as we know in the news recently. And one of the biggest problems they face is the amount of data that they've had to process. Not only their own internal systems and systems on computer already, but also legacy data, which is just not in a format which can be handled very easily. So what we found with our work with the banks is that they have a number of legacy formats. Sometimes it's legacy data on computer, sometimes it's legacy formats in paper or microfiche or microfilm, and vast quantities. And to process these vast quantities takes an enormous amount of resource. So we've had an example recently where the estimated man time to process all the paperwork and microfiche for one particular organisation was around 3,600 man years. But to digitise that process and put some automation in place and to capture some of the information from that paper to then feed into the redress systems, we've been able to reduce that timescale down to 12 man years. So the savings are obviously absolutely immense, both in shortening the period for the customer to get their redress and also for the banks for cost. And we know recently from an example with Lloyds, who were fined just over £4 million back in February for not processing fast enough. So clearly it's something that needs to be addressed, and there's still a lot of PPI claims to be made, and there's still an awful lot of processes out there which can be optimised and digitised to streamline that through to the redress.
So Ian, do you reckon the banks will have to be proactive about this, or do they basically have time to just wait until the regulators come in?
I mean, I think the way the banks have handled this has changed. They started off being waiting to see what would happen, and they've been hit with far more requests and claims than they expected. Also, the regulator has taken a much harder stance, and as at the moment is not giving an end date to when claims can be made. So I think it's in the bank's interest to actually be proactive and work in a proactive way for a number of reasons. One being they can actually get to that point to say that we have processed everything we can, we've gone through all the data, and we believe that we've addressed or are addressing and have the details for everybody who has a claim. Therefore, please give us an end date. Mm-hmm. Equally, by doing that and processing all this legacy information in a batch fashion in an automated way, they can get to the point where they can see their exposure far quicker because they've processed all the input, they know what the redress needs to be, and they have a ring-fenced amount then which they can say, this is our true limit of exposure. We're being proactive, Mr. Regulator, please put an end date on this and we can finish with this and move on.
Mm-hmm. Well, that sounds like just one of many examples that banks will have to deal with in terms of, say, regulation or compliance as well. Of course, payment protection insurance is just one example, and in the third chapter we'll be discussing more examples with the focus on legacy records and compliance.